Alrighty, so how do I see this war playing out? Already, here's the situation, right? This comes out last night. U.S. announces 245% tariff on China, right? People are making memes, China. We don't even know what's real and not real at this point in time, right? We know 145%, 125%, but at this point in time, new numbers are coming out. There's new press releases. There's 245% numbers being floated out there. It seems like even the White House doesn't know what's going on. The moral of the story is, in regards to this whole situation, is it's just completely out of control. It's completely out of hand right now. And it's just getting, to be ridiculous, right? People are seeing stuff like that. This is just ridiculous, man. When's this ever going to end? This is insane, right? Now, the playbook Trump's actually using here is not an original playbook that no one's ever used. The United States, we've used this playbook before in other types of wars, like wars in which, people die in, right? Like actual violent wars, right? And we even used this playbook in Japan because there was a lot of people that have always wondered, did we give any sort of big warning to the Japanese citizens before we obviously launched the nukes on them? And, the moral of the story is not really, right? And so we're kind of doing that playbook of we're just crazy, we're just going to announce it, right? If we go to 245% tariffs, 1,000% tariffs, boom, we're just going to drop it on you, right? And so this is a playbook that has played out in the past, right? Now, this economic war doesn't just involve US and China. Because it involves the two most popular kids in school, it's now involving everybody. As what happened in World War II. If you look at World War II, by the time you got deep into World War II, basically everybody was involved. It was impossible to not be involved to at least a certain extent into World War II, right? It wasn't like it was just one country versus another. No. By the end of it, everybody was involved. And that's what we have going on in this economic war, where you look at every single country is now involved. There's no way out of this. You're in, and now you're going to have to try to figure out, do you want to side with the United States more? Do you want to side with China more? Do you want to try to play it in between, which is a tough place to play right now? And so, it's kind of like World War II had the allies and had the Axis powers, right? It seems like we're going into that exact type of situation, but on an economic front now, where you're going to have certain sides together and certain other sides together, right? Very, very fascinating. Now, it's very important you understand, no one wins a war. It is true, there are degrees of loss, but no one wins. And I 100% agree with that. There's no one's going to win this economic war that's going on right now. Everybody loses. Now, some people are going to lose worse than others. But whenever you have a war, there's no actual winner. You go into every war thinking you're going to be the big winner chicken dinner. We're going to win this war. It's going to be great. But in the reality, even when it all ends, even when you win, you don't actually win. And that's been throughout history, right? And I can show you an example of that. World War II, right? Everybody views the United States won World War II, right? And you can say, yeah, we won World War II, right? Because at the end of the day, but what did we actually win? I think that's very important. What did we actually win winning World War II? We got more influence for generations to go in the future. So instead of German influence, Japanese influence, we got to have our United States influence for the last many, many generations, right? And more influence than we certainly ever had ever before, right? The Western, world, right? But what did we lose for that influence that we had for the last several generations? Well, we lost a lot. We lost millions of lives, right? Not only in World War II, but you think about all the wars we had to do ever since because of this number two thing. Ever since World War II, now the United States had to become the police officer of the world. And still to this day, if anything happens around the world, everybody starts looking at the United States and they say, are you going to send some weapons to help this country? You're going to send some troops? What are you going to do? So ever since World War II, now the United States got put in this position where we're the world's police officer, right? And you can't get out of it. Once you're the world's police officer, you got to stay in it. There's no way out once you get in. We've spent trillions and trillions of dollars on defense over the last number of decades. That's put us into ridiculous levels of debt, where our federal debt now is somewhere around $37 trillion, and it's on its way to $50 trillion, and then $100 trillion of debt, right? And a lot of that's gone to defense budgets over the years. The country, right, where we always have to be remembered as a country that killed massive amounts of innocent people, which is not a pleasant thing to be remembered as of in modern times, right? Like, if somebody had, killed massive amounts of innocent people, 500 years ago, people say whatever, but when it happened in, the 40s, it's not the best look, right? And we had to help rebuild the entire world because the world was in shambles, especially much of Europe was in shambles. It was a complete mess after World War II, and we had to help rebuild that, right? And so we got much more influence for generations to come. We won that, but we lost a lot in the end. And that's exactly what happens in an economic war as well. You might win something, but you're going to lose a lot. And it's not like you lose a lot for a small amount of time. You lose a lot for a long time. These things I just ran you through here, right? When you think about having to be the world's police officer and how many American lives have had to, go throughout all the battles ever since World War II and been lost, and all the trillions of dollars we spent, is a lot you have to give up for that influence, right? Now, it's very important that we solve this economic war ASAP, because if we don't, it will get out of control and we will have a 5 to 10 year economic war ahead, and it's going to get much uglier than what you're seeing now. So it's very important that we clean this up in 2025 and we don't take this into 26 and 27 and 28 and 29. You got to get past this stage, or you'll end up in like a World War II situation where it lasts, a long, long time, and it's a very ugly situation. Now, we have some actual developments here that I don't think they're getting talked about enough that are actual positives, okay? I know. That's weird. I read the Times of India, but I also read Chinese publications and U.S. publications and European publications, okay? I never want to just fall into anybody's propaganda of one country trying to form my mindset. So I read everybody, okay? But here it is out of the Times of India. Ball is in their court on tariffs. White House says Donald Trump is open to deal with China, right? He's open to a deal. Ball's in their court. That's a positive. That's more positive than I've seen it certainly in the last number of weeks, where it seemed like for a while the White House was trying to put out this kind of this presence of we don't even care if you do a deal, where these tariffs are on you regardless. There's no choice. Now opening that door, Donald Trump's open to a deal with China. Okay, that's a big step in the right direction. Big step in the right direction. We also got something that went a little back page 12 hours ago. China open to talks if U.S. shows respect and names a point person to deal with, right? Listen, that's a huge positive. That's a huge positive. And, the Chinese, respect matters a lot to those folks, right? And I've got to be honest with you, Trump has not shown a lot of respect to the Chinese. He has not. So if he starts showing some respect, right, and we can get a point person and somebody to actually start doing some talks, boom. This is positive developments. Positive developments to get this crap figured out before it gets completely out of control, because it's already getting out of control. It's just how much are we going to go? Then we're going to talk about 300% tariffs. Why not do 1,000%? No, let's go 2,000%. Let's go 10,000%. And then all of a sudden you get to such a level where all of a sudden the Chinese say no American companies are allowed to sell anything in China. Get it all off the shelves. That's the sort of place you start going, right? And then America says no Chinese products are going to be let in the United States at all. Not one Chinese product. If it's made in China, we can't let it in. Good luck with us on doing that, right? But that's how serious it can get as time ticks on, and it just tick for tack, and it's a mess, right? But this is positive. This is positive, okay? Now, this whole notion about the United States made everybody rich and we're poor because of it, it's such a bunch of BS. And at the end of the day, I believe the Trump administration realizes it's such a bunch of BS. I understand we're going to try to negotiate off of that premise of we made everybody rich, we're poor. But at the end of the day, you really break it down. Would the United States trade places with anyone else? And the answer is absolutely not. Would we trade places with China? Nope. Would we trade places with Russia? Nope. What about Australia? What about Brazil? What about India? What about Germany? What about the UK? What about France? Of course we wouldn't. We wouldn't trade places with anybody else as a country. So that notion of like, we made everybody rich, everybody's so rich now, we're so poor, it's just a bunch of baloney, right? It's a great for a negotiation talking point of like, putting this out there. But when you really break it down, it's just not true. It's just not true at all, right? And so at the end of the day, when you come back to that premise, you realize like deals have to be made. The Chinese own a ton of our treasuries, right? Their economy is still very dependent upon our economy and vice versa, right? And so at the end of the day, hopefully cooler heads will prevail in this. And so what are my thoughts about how this is going to play out? Here's how I think it's going to play out timeline-wise. I think early talks between the U.S. and China are going to happen in May. So I think we're going to start to have a little more positive, and then there's going to be some sort of announcement that comes out around, some key individuals for the U.S. and some key individuals of China are going to meet and talk things out. Maybe they're going to meet at a neutral place. Maybe they're going to talk on a Zoom call. I don't know. Okay. But the moral of the story is like early talks will start in May. That's my personal opinion on that. Then in May, we're also going to start to do some deals with some other countries, some smaller countries, some larger countries. Some deals will start to be done, right? And then what I think is going to happen is in either June or July, I think Trump's going to have a big day. I think he's going to call it America's Back Day, okay, instead of Liberation Day. I don't know. It's going to be something like that. It's going to slogan it, okay? America's back, baby. And I think in that particular day, it's going to be a big day where all these deals are announced with a ton of different countries, and here's how the U.S. is benefiting. This country allowed us to do this. This country's allowing us to do this, blah, blah, blah. Go through it all, right? And obviously the Trump administration is going to pitch it as like a big win, and maybe it is a big win, but they're going to pitch it as a big win, certainly, right? And so it's going to be a whole big thing that's publicized. And even as you lead up to that day, the market will already be, bouncing huge at that particular time, because how this is. Like the market's always kind of playing the future. So as soon as a day like that's announced and we got all these deals coming, and it's going to be a massive thing. Because I don't think the Trump administration is just going to do all these deals in the DL and just leave it there. I think they're going to want to make a big announcement to the whole world, to the whole United States about we got all this coming, we got all these announcements and things like that, right? So that's how I think things are going to play out timeline-wise. And we'll see. Okay. How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area.
Good to see you.
Sat down and you're like, wow, it's a little calmer. And I was like, that's a good thing.
It is.
Actually, right? It feels like, let's like catch our breath and try and figure out where we are. What would you tell people now?
It's funny. I have a dinner coming tonight with like 7 or 8 CIOs. I'm curious to see who's bullish, who's bearish, and get the landscape cross asset types. But I feel worse about the equity market right now than I did a week ago, only because we're up, and I don't have any more certainty about how long these tariffs are going to last. I think everybody in the world knows guidance isn't going to be great, or if there is guidance, but it's
no, this is way better. This is way better. Here's why. The administration now has shown you their cards. That they're willing to negotiate, they're willing to do deals, they're willing to, put a Band-Aid on the market, those sorts of things. A week and a half ago, probably. It was around a week and a half ago. I think we had mass uncertainty. At that point, people weren't sure. They're like, oh my gosh, they're actually going to keep on all these tariffs for a long time. Or that, in my opinion, was max uncertainty, kind of like in the Rona crash, right? In the Rona crash, we had a period of mass uncertainty that happened, and that was kind of early March to kind of mid-March, right? Then the market actually started bouncing back late March, and into April 2020, right? Now, there was still a gauntlet of bad news, still massive uncertainty, right? But it was more clarity than certainly we had. And that's exactly how this feels right now. We went from max level uncertainty to now we're getting a little capitulation, we're getting a little more certainty, and that feels good, right? And so if you're wondering, has the stock market bottomed? The answer is, as long as we don't have another black swan event come now, yes, we have bottomed, right? We hit that bottom of about, what was that, a week ago or so? Maybe a week and a half ago now. And that's a bottom as long as you don't get another black swan event. Now, if you get a massive recession or you get some crazy thing to happen, China goes into Taiwan and takes it over, like that could be a whole different can of worms. But outside of those freakish events, like we already hit a bottom now at this point in time because uncertainty is now starting to, let's call it, get a little more certain. The future is getting a little more certain now.
Hard to know if my original assumption is, okay, my 2026 earnings are now my 2027. It's been pushed out a year. Stocks are down enough that that's about in the price and we're back to even. Or if people now are expecting this recovery that I don't think will be the same V-shaped economic recovery we've gotten in previous cycles. That
Who's to say earnings are going to tank? Everybody's like now running this assumption that earnings are going to tank this year. Who's to say they're going to tank? Everybody's brought down their estimates. They brought down their expectations. Off of what? What concrete evidence do you have to be taking down all your EPS estimates? You have nothing. Has Apple come out, Microsoft, Nvidia, all the biggest companies that matter the most to the stock market have said, man, that's it for our year. We're not hitting any numbers we thought it's going to be bad. Has anybody come out and done that from the big dogs? No one has. No one. And so then they run with this assumption of earnings are going to be bad this year. Off of what? Off of because Trump's talking this and talking that, and so you're scared now? You got to have more concrete evidence to all of a sudden say, you know what, yeah, earnings are going to tank this year. What happens if all these big dog companies that are going to be reporting next week in the next few weeks, what happens if they all don't have anything bad to say when it comes to their earnings for the remainder of this year? And they feel like, kind of what we thought going into the year is kind of what we expect to do. What are you going to do then? Then you're going to capitulate to the other side and say, you know what? Earnings are looking better than we thought they were going to look. So now all of a sudden, you start revising all your estimates up. You start revising all your price targets up. And all of a sudden, boop, boop, boop. And that's how you get a V-shaped recovery in the market. Because everybody, all these analysts, all these Wall Streeters get so negative with their sentiment. And they start taking down price targets, taking down EPS estimates, taking down this, taking down that. Oh, S&P's only going to have 230 earnings, blah, blah, blah number, right? And all of a sudden, they find out, oh, wait, it's not as bad as we thought. We got so scared there. Companies are saying it's actually not that bad. Okay. Boom, boom, boom. And next thing you know, you get this massive V-shaped recovery. And that's why this year reminds me a lot of 2018. I keep bringing it back to 2018. There's so many similarities. The tariff drama and, the tanking early in the year. And then we bottomed out the market around, late March into early April of that year and went through a straight ripper rally through the spring into the summer. Not a lot of people saw it coming. A lot of people hated that rally. And then they hated the downfall a lot more. Because then you got a major fall in the fall time in 2018, which is still on the table. That could always happen, right? Who knows? Maybe we get a ripper rally this spring and into the summer. And then all of a sudden October rolls around and things get scary. That's a potential as well, right? So, but this is how it happens, man. This is how it happens.
I'm a little worried about that. Look, there's nothing worse. I mean, the best thing is you can be a contrarian bull and be right.
Well, I was going to ask you about
I love that.
So the 9 CIOs that you got dinner with tonight, how many hands are going to go up in the air for bullish?
So
hardly any, right?
We forced them, and the same crew was here at the beginning of the year in January.
And that's bullish in itself.
Only me and one other were bear.
Listen, man. Listen. I'm going to break it down real simple. If you're at a table of chief investment officers and you ask them, are they bullish, and no one raises their hand, most bullish signal you can get. Because if you're at a table of 7 and chief investment officers and no one raises their hand, as long as things get a little more clarity, eventually the next week you have dinner with them and one raises their hand, I'm actually bullish. And then you have dinner the next week with them and another one raises their hand, I'm bullish too. And then the other guy's now yeah, I'm bullish. I'm more certain. The other guy's I'm bullish. And the next week 2 guys are I'm bullish. And then another guy's I'm bullish. And so that's how you form bottoms. That's how you start getting buying pressure on the market, right? when everybody's bearish, like it's sometimes the most bullish thing you could possibly get for stocks over the next 6 months after that.
First half of the year, everyone else was bullish. It'll be interesting to see if not the market's down, they're all bearish or not. It'll be an interesting, tell.
Have you not watched CNBC last week or two? I mean, almost everybody's bearish that goes on there. You literally watch CNBC, watch Bloomberg the last week or two, and try to find bullish people that are like optimistic about 2025 from an investment standpoint. Give me a break. Just give me a break. Everybody's talking negative, right? And that's the most bullish signal you can usually get.
You had the Bank of America fund manager survey today was like the most negative or one of the most negative in 25 years.
And so that feels like, oh man, I want to be there. It's just
that makes it feel like call options. No, I'm not going to go that far, right? But bullish.
I think in this case, like more uncertain, and every ounce of me wants to get
5th most bearish fund manager survey in the past 25 years. 4th highest recession expectations of the past 20 years. This is all in speculation. You have nothing to go off of to make a recession call. Nothing. You're not seeing it in the unemployment data. You're not seeing the jobs market. You're not seeing it with big, huge companies doing mass layoffs right now. All this uncertainty, where's FedEx to say, hey, we're cutting 50,000 employees? Where's Amazon to say, hey, we're cutting 75,000 employees? Walmart say, you know what, we're going to lay off 100,000 employees and 20,000 of those are going to be corporate. You don't have any of that right now. Doesn't mean, 9 months from now or 2 years from now or 5 years from now we can't have a recession. But for right now, you don't have anything to make that call. You're just making it based upon speculation of Trump saying all this stuff, I'm scared. And I don't know what's going to happen with tariffs. But you have nothing to go off of to make that recession call. You don't have earnings to go off of. The big banks have come out with great numbers. They've had good guidances. We're going to listen to Brian, the CEO of Bank of America, in just a minute. What you got to go off of? And you're making recession calls? Come on, man.
Bullish when everyone's bearish, but uncertainty is supposed to be bad for multiples. And what's coming on the
at least when everybody was making those recession calls at the end of 2022, going into 2023, at least they had some stuff to go off of, right? And those guys all ended up being wrong in the end, but at least they had a little bit to go off of, right? There wasn't just a lot of worries, but we're seeing like a lot of big companies doing layoffs and things like that. At least you had something to go off of. Right now, all this is speculation here in the short term.
The other side of this, isn't going to be fiscal stimulus, balance sheet expansion, and a lot of Fed accommodation, which is kind of accompanied the previous recovery. So it may be a little bit of a slower fundamental path. And so therefore, I don't know if we snap back to whatever everyone's targets were. It's only April. In January, everyone had 7,000 targets. Now that seems like a mile away.
Okay, well, because
you did 2 years away.
You did have more target cuts. Wells Fargo Investment Institute to 59 to 6,100. That's their range.
Yeah.
Jefferies to 53. Everybody has dialed it
59
back.
to 61 would be great. I mean, that'd be double-digit returns. I think we'd all sign all of our money in that right now.
That feels like a home run for sure.
Yeah.
You said fewer rate cuts or a less accommodative Fed. What if we actually get more than we think at this point? I thought Waller's comments yesterday were pretty interesting. If you figure that inflation is going to continue to come down, both because it was already trending that way and if there's a pullback in demand, that the Fed now is going to be uber focused on the labor market. And if now we start to see the labor market start to soften even further, the Fed's going to become more engaged. And they're going to do whatever they have to do to keep that from fully falling apart.
So I have two responses to that. Well, three. One is, I don't know. Okay. Two is, I think you can look at the prices of things that are made in China and other areas at big stores, at Target, at Walmart, and Costco, and track if they're getting more expensive, toasters and things. Let's just see, because I don't know if I believe prices are going down. I think the big debate would be, sure, if we're really going to have a recession, prices go down. But are stocks going to act great if the economy rolls? So that's like the tension,
But when are you supposed? When are you supposed to buy stocks when it looks bad if the Fed's getting engaged?
So I think it's right, and I think the last point is like I track really carefully the relationship between the perception about rates in the future, the so-called 12-month forward, 24-month forward Fed fund futures, and price to forward earnings of stocks. I know that in the last cycle, you saw they were hiking, and at some point, people said, I don't care, they're still hiking, they're almost done, I'll buy stocks. That was day one of 2023, right?
It's just now, don't fight the Fed, right? Get ahead of whatever's going to happen.
But now I'm sort of saying, okay, well, things ripped in 23 and 24 when we knew they were going to be accommodative, and they were. But at some point, if they do 50 or 75 more, it's not because I'm psyched about the accommodations, because things are eroding. I actually think what's interesting to think about a little bit is maybe some of the data we saw from the financials isn't as bad as people thought. Right? It's not like the guys who run banks are morons. They have a lot of data, and they weren't going to say, like, things are fine in March, or we don't know about it. But they kind of told you, generally, that things were holding up a little better.
They were able to give guidance when most people and other companies can't give anything.
Like, I didn't see, if you really look at the underlying businesses at BAML, at JPM last Friday, I didn't see them saying, like, the consumer is really tanked off in the first part of April. So the hard data I actually thought was upside surprise, to the bank so far. I would say that's better than I thought.
Yeah, definitely.